Welcome back to the Bitcoin Reformation Podcast, where we are three pastors. And again, this week, I wonder how many times I'm going to have to say that, David. Just two this week, pastors who love Jesus and yes, Bitcoin too. We miss Ben. We kindly offer him invitations back to us, but he is still just such a busy guy doing way too many things, but obviously using the skills and abilities God has given to him for the kingdom of God, which is an awesome thing in that way. Today we're excited for you. We'll come up with the title for this later on, but we're going to try and talk about different ways people are using Bitcoin in sort of the financial world, different ways that you might buy something other than Bitcoin or use your Bitcoin for something other than maybe the ways in which we traditionally talk about it here at the Bitcoin Podcast, which is buy it, hold it, and don't sell it until a much later date, or maybe put it in cold storage like we've talked about. And so I wouldn't say this is a departure from what we normally say, but if anything, I like to think about it from the sense of, hey, if you're coming along with us, you've probably heard about some of these things. And if you haven't, we want you to at least to be somewhat equipped to know what they are. And so we're going to talk about those. And obviously, we're not financial advisors. You need to do your own research. We're not able to necessarily walk you through all of those things that you need to know, but we can tell you our simple layman's perspective and give to you the first go at it that you can then take on your own and make your own decisions. But before we go there, let's just quickly check in how things are going. Here where I am, things are mostly well. It's Lent, and so it's busy. Last night was a rather crazy day for me here at work and then at home too. We've talked about Judah's struggles here, and he had more blood in his vomit than I would care to admit. And so we were at ER again last night, making sure that there was not, food impactment or his intestines weren't twisted and all those sort of things. And it's just one of those you long. I always tell people when you're walking through these times of like grief and or continued long-ended struggle, the cry is always, Jesus, come quickly. Because we know when Jesus comes, all of the struggles and trials we see in the world are going to go away. And so we're experiencing some of that in our life. And it's just one of those, you got to find the way to trust, find the way to surrender, even in the midst of what is an incredibly tiring, scary sort of thing. So other than that, though, kids are growing up, getting older, and interspersed in all of the crazy things are these glimpses of love and faith that are growing in your kids that it doesn't make the problems go away, but it's the sort of rays of light in the midst of darkness that you kind of cling to in these sorts of seasons of life. So that's kind of what's going on over here in my neck of the woods. Spring is here, allergies are still here, all those sort of things. David, what's going on in your land, in your life?
Yeah, I'm just nursing a cold. I get these respiratory things and they hang with me for quite some time. I managed to, looks like, give it to my wife, my poor wife. Normally she's about 2 or 3 days and then she's in the clear before me, but this one is hitting her a little bit more. No, we're enjoying Lent at our little mountain church. We've resurrected Lent midweek evening services. We're using a prayer service, order of prayer called Compline. So it's very simple. It's a fun church where the church didn't have much further to fall than we sort of fell. And then with some of us having arrived and them being in need of help, me being a Lutheran pastor, I'm the head elder, and get to, pardon me, help 1 to 2 Sundays a month, and then with things like this. But they're sponges. They're game for it all. They want to learn.
Cool.
They want to be stretched. Yeah, it's a lot of fun to be a part of a community that kind of got that frail. So much is gift. There just isn't nobody's sitting around saying this isn't how we do it or this isn't how we've always done it, because that wasn't working. That had fallen out from underneath them long ago. So it is this just fragile fledgling little community, but it's a very dear thing. So I think that's what's going on that I can make mention of. So we love our little local church, and we're slowly rolling out the red carpet to our many neighbors here in the Big Bear area. It's a unique place. It is 3 zip codes, maybe 20,000 inhabitants year round. Those winter weekends can swell to 120 when we do get good snow. Not so much this winter. But it does not, this community does not blend and flow into others. There's, half an hour shortest distance to a next little kind of high desert hamlet, and then the next real towns and cities are an hour away in, three different directions. So that's a very unique thing. Yeah, we're enjoying it. But yeah, for all that, glad to be with you here today, Jared. We do hope to get Ben back on. I'm trying to tease him slowly with some guest appearance. Here we go. I have no idea. Yeah, I have a microphone issue. I'm muting. It's just so strange, but hopefully we'll just watch that. So, well, all right. Well, let's get into today's topic. Really, for the longest time, we have said that coin is excellent as a store of value, even as we have talked about it also as a unit of account occasionally and a medium of exchange. Those are kind of the three properties of great monies. But store of value is probably what we're most excited about on the one hand, and yet you would expect something like this, if it is good money, as it matures, you would find people developing around it or finding from it different use cases for it. And so, just in this show, we thought, hey, let's just begin to share, as you said, at a layman's level. So, sort of an initial level, you can go deep on all of these topics, some of the different use cases for this. Now, I'm going to pause right there, though, and say most of these are use cases kind of from position of the Western world, America, a place of privilege. I'm reminded this week with things happening in the world, Jared, that there are some people for whom the fact that it is sovereign money is more important than anything else in the world for them. And by sovereign money, I'm saying that you have the ability when you invest in Bitcoin to be the holder of the Bitcoin and not trust somebody else to hold it for you. It's also true that the issuer, who's the issuer? It's not a particular person, it's not a company, it's not a nation. People die, companies get bought out and fail, and nations can essentially do the same. So I think of people in Iran right now. Of course, Iran is in the news. We think of the nation of Iran, the government of Iran. We think of ayatollahs, leaders, and all that. But what about your average citizen? There are citizens in Iran who are struggling for a variety of reasons. And one of them is that their money is quickly being debased. This has been a story now for months. But for somebody in Iran who has been saving, let's say, in Bitcoin, they have this huge hedge. They have this sovereign money that it doesn't matter how wise or foolish their leaders are. They're holding on to something that is now not subject exactly to the whims of the world, such as their local currency is. So that's just one. That's kind of an international use case. That's maybe a whole different show. We've sort of had those shows before, I think, even kind of on freedom money, how it's being used around the world. We've even talked about using Bitcoin as a way to get value, dollars, or Bitcoin itself, the value of Bitcoin to missions and missionaries. We've made mention of that. But having said that, having acknowledged all that, I think we're kind of pulling back, thinking of ourselves, thinking of our children, thinking of our parents, thinking of our neighbors, kind of a Western audience, and saying, hey, if Bitcoin's, again, good money, what are the different products being built on top of it or being offered on account of it? Does that sound like a decent framing, Jared, or is there anything else you'd like to offer?
No, 100%. I think that's a great way to think about it because if you were to ask someone, how do people use the dollar? I think they would kind of look at you like, well, that's a dumb question. Like, why are you even asking me that? Like, I don't understand. But for something like Bitcoin, that's still very much developing, still very much coming to age, being financialized by the sort of Wall Street world, which is, we would say, is a necessary sort of thing. If it's truly money for everyone and it is the best money, we can expect that everyone will want to use it and want their share, portion, whatever of it. And so in some ways we want to talk about the different things and what we at least think is somewhat interesting, so that then we can say, hey, these are ways other people are doing it. I think we could say we would advocate that you still buy Bitcoin, and that's call it the least risky, the most safest thing, et cetera, and that these are all, call them plus ones, or call them, if you're curious about these things, again, go and do your own research. But there's a couple that we want to talk about that we think are interesting. And so I think I want to go with the one that, it's funny, I sent David a list of these things beforehand, and it's the one that I forgot to send to you because I find it incredibly intriguing from my own personal sort of state in time and age in life. So being that I am 33 right now, at least as we record this, if you watch in the future, I'll be older, obviously. But as a 33-year-old person who rents his home, and we're a single income family, right? Not necessarily that we have much to want, but that we're not necessarily ripping at the seams because of how much free cash we have. The idea of owning a house, when I look around my neighborhood, there's a house on the end of the cul-de-sac that's single story, 4 bedrooms, 3 baths, that's for sale for $450,000 with interest rates at about 6%. I mean, you're looking at anywhere between $2,900 a month plus for a rent or for a mortgage payment. And yet I look around too and say, hey, I know my brother is looking for a house, and they just sent us a townhouse that was asking price for $410,000. And, you look at those sort of prices, and it's, at least for me, it's very eye-popping. It's like, that's a lot of money. The monthly payment seems so high. And so in many ways, I do sometimes feel like that millennial who says, hey, I'm never going to own a house, or at least if I do, it's a crazy thing to have to do or be able to do. That just think how much money I have to buy a house and actually be able to afford a mortgage payment. That if my wife goes back to work, that's basically what she's going to be paying for. Hey, you want to go to work? You're going to pay for our mortgage, babe. Like, congratulations, thanks. And so from that perspective, there is a company called People's Reserve. They don't actually have any products out yet, and so in some ways they are promising things coming second quarter of this year, which some people would say never believe anybody until they've got the proof of said thing. But nevertheless, the idea is very intriguing to me, and they offer 2 things. One of them is something that I would say is incredibly out of reach for me and for most people, and that's a complete Bitcoin mortgage that if you are able to post 1-to-1 collateral of Bitcoin to how much your house is, they will give you a mortgage for the cost of your house in dollars if you pledge your Bitcoin as collateral, which, in today's world would mean if I can pledge $450,000 in Bitcoin for a $450,000 house, then they'll give me a mortgage, and eventually sometime over the cost of that loan, the Bitcoin will go up enough, and then my house will sort of get paid for. But I don't have that much Bitcoin. That's not possible for me, right? So that's not necessarily what I'm intrigued about. What I'm intrigued about is this thing that they are calling BMI, Bitcoin Mortgage Insurance. And so, David, maybe you can actually help me a little bit on this. But from what I understand is that if you cannot make a 20% payment, 20% down payment on your house, then you're required to get something that's called private mortgage insurance. Is that correct?
Yeah, PMI. That's correct. I had to familiarize myself with it. It wasn't the situation we were in, but you're exactly correct. PMI. The whole point of PMI is it protects the lender. You, the borrower, have to pay it, but it protects the lender because ultimately, if you haven't posted 20% equity, down payment on your house, the idea is you're a risk to them. You're a risk to them. If the market goes down, which it could as much as 20%, and you default, then they're, left with, they're holding the whole thing. They're in the breeze. So there can be a variety of reasons why you get PMI, but that's one of them. But it does nothing for you, the borrower, other than make it possible for you to borrow. Probably not even at a great rate, all these things. But BMI gives protection to the lender, and then I'll let you take the and away. What's the and here, Jared?
And this is what's most intriguing. So PMI, right, like David says, you pay into, and it's much like, I don't know, in some ways it's much like your rent, Or I also feel like it's sometimes like your car payment. Sure, you got your car or you have your rent, but it's just kind of this money you send into the ether and it just kind of disappears and you don't really get much back from it. And so PMI is the same way. You pay it, you owe it, but there's never anything you get from it. And so BMI is structured somewhat similar. That from what I've seen, and correct me if I'm wrong, David, they've said that they would ask you to put 20% in Bitcoin down, and then every month you would contribute to BMI, to your Bitcoin mortgage insurance. But that every time you did that, it wouldn't be saved as dollars. Instead, Bitcoin would be bought with it, is my understanding. And then what happens, as we've talked about, Bitcoin in its value in US dollars goes up and down over time, but largely it goes up over time at a pretty substantial rate. Maybe not in the last 4 or 5 years that I've been in Bitcoin has it done that thing, but nevertheless, in the past history, it has. And so the theory is that you take something that's a 30-year mortgage and then you put money down that would go towards something of a mortgage insurance that would never actually gain value, that would sort of just be there. And instead you buy an asset that appreciates, goes up in value over time. And if you contribute enough to it, if you hold it long enough, et cetera, there could be a day in the future when suddenly those Bitcoin holdings in your mortgage insurance are equal to the value of your entire mortgage. And so what they say the product will be is that you'll contribute that percentage, you'll make those contributions to it, and then whenever your BMI equals the amount of your mortgage, that Bitcoin will immediately be liquidated or sold for US dollars, and then you will own your home outright, no more mortgage, no more anything. And, of course, they're marketing a product. So they're using what I would call somewhat aggressive numbers to make these things look good. But in their marketing, they say, hey, this turns a 30-year mortgage into an 8 or a 9-year thing, which again, when there've been talk about 50-year mortgages, when I'm thinking about how on earth I'm going to be, I'm 30. That means I'm going to have a mortgage until I'm 65. Like, right. What? I'm not going to own my house until I'm retired. Like, that's crazy talk. But you think about, hey, what would this allow me to do as an individual? What would this allow me to do for my children? Even think about it from the lens of being a generous person. If I own my home in 8 or 9 years, think of all the ways that I could bless other people, because now suddenly I don't have another, $2,300, $2,900 mortgage to pay every single month. And now the possibilities sort of just explode all over the place. And so it's a very intriguing idea. And as someone, at least who's been in this space for a long time, it sort of makes sense that Bitcoin would somehow be involved in mortgages, in the way you buy a house, in the way you finance a house, because of the way in which it is. It's the best collateral, right? It's the best asset to post to sort of say, hey, I've got this money, and we know the sort of price appreciation over time. So I'm very curious about that. I know Ben probably is too. I'll speak for him, even though he's not here, knowing that he rents right now, and that I'm sure he would most certainly take advantage of something like this if it was offered to him as well. Is there anything I missed, David? Anything you think I got wrong there?
Let me sort of put this into personal terms. So the idea is, the dollar is, you have an interest rate. So first of all, oh gosh, I have, in the first 5.5 years of a 25-year home loan, paid just under, in dollars, so first 5 years of 25 years, that's 1/5 of the time, I have essentially shelled out 1/3 the cost of the home, and sometimes it's more
Crazy.
aggressive than that, depending on your interest rate. So what interest means is that over the course of time, by the time you satisfy that loan, you're going to have well outpaid the actual initial cost of your home. That's just the way it works, right? I keep track of our mortgage as if I've been paying it in Bitcoin all along, right? And so I have some big ifs here. That the ifs would have to be like this: I keep track of it as if my lender allowed me to do that. Okay. Second of all, as if the lender were saving up that Bitcoin and himself, herself, themselves, whatever, waiting for the value of that pile to equal my home. But here's where I'm at. And by the way, we're like 50% down from our all-time high 5 months ago. And these are the numbers I have. Okay. Our home was originally purchased 5.5 years ago again for a price equivalent to something like 47.9 Bitcoin at the time. So at the time, I would have had to have a big pile of Bitcoin. Big. I would love to have 47.9. Amen. Let's have it.
Yeah,
At
right.
today's Bitcoin value, even with the drawdown, at today's Bitcoin value, the same purchase price equals only 5.6 Bitcoin. 5.6. That's an 88% drop of the cost of the home if you price it in Bitcoin. That's pretty darn exciting, right? So I could stop right there and say, whether it's this product that you're talking about with Horizon, or I can think of a company out of Philadelphia that's doing commercial real estate loans. You go to them and say, we want $10 million to borrow to buy this apartment. This was their real example. And they said, no, we will not lend you $10 million. We will lend you $11 million with that last 1 million immediately being sunk into Bitcoin that's held in such a way that it's collateral against the building should anything happen to the building. But also, we believe that $1 million of Bitcoin is going to grow, appreciate very quickly, and allow you to satisfy your note on this mortgage at a much advanced pace. Advantageous for us, advantageous for you. So that's a real forward thinking lender saying we want to build it in again. It's sort of a different way of packaging that BMI, that Bitcoin mortgage insurance, hard baking it directly into the mortgage itself so as to protect the lender and the borrower, really, and advantage the borrower. So, again, if I could just price homes in Bitcoin over the course of time, they would drop. Meanwhile, in US dollars, this same home that we bought 5.5 years ago has increased, so Zillow tells me, has increased by 34%. And you say, well, David, isn't that great for you and Megan? And I say, yeah, it's great for Megan and I. It's bad for Jared and his wife. It's bad for Ben and his wife. It's bad for my son getting ready to graduate college, who's going to have to think about not only job, but housing. You've got a housing market that's now stacked against him in that the nominal prices of these homes has gone up, well, at least around here, something like around 34%. And the interest rates have certainly spiked in the last 5.5 years. So, anyways, despite all my home's dollar value rising 34% in the years since that purchase, its current value, the current supposed value of my home, even when priced in Bitcoin, so having gone up 34% in dollars, pricing that in Bitcoin is still only 7.5 Bitcoin. I say only 7.5 because I'm comparing that to the original 47.9 or 48 Bitcoin, right? Even with that dollar increase, the Bitcoin price has just dropped dramatically, which is still an 84% decline when priced in Bitcoin. So I just keep that for me. And what that says to me, David Rufner, and to my son, and I know to you, Jared, and your family is, hey, let's try to spend less every month than we take in. And with the difference between the two, we have a savings technology available to us right now that can help us with that housing down the line, should things continue on as they have. That's our conviction. That's my conviction and yours. We can't exactly give anybody else that conviction, but they can do their own research. And if they come to a similar conviction, it might be something you try to consider. Because if you're trying to save that 20% down payment in dollars, and meanwhile, inflation is running away every year at something like 6 to 12%. Oh, you'll never catch up to that 20%, or so it would feel. So there you go.
Right.
That's what I would add to it. Kind of more just the global picture around that specific product that you're speaking of.
Absolutely. I don't have too much to add. I think that was great. Is there something, I'll throw it to you before I talk more. Is there a product you would like to say, hey, I'm interested in this, or I'm curious about this, or hey, here's something someone else is doing?
Well, I can tell you that I sat in on my mom, who's 76-year-old, her time with her financial guy, and I won't say what company he works for or his name. Super nice guy, has done a lot of faithful work for her, and yet, oh boy, I wish she had somebody else. Okay, she's in a 60-40 portfolio split, 60% stock, 40% bonds. Considered boilerplate, considered It's like the American Bible in terms of what a boomer should do. And yet last year was a bad year and only gained like 3 or 4% for her. Maybe it was even down in the
Mm.
1 to 2. It just was not great. And so I look at that, and then I look at a product that's being offered called Stretch, and I'm just generally really excited about this product. So Stretch is a perpetual preferred stock offered by a company called Strategy, formerly MicroStrategy, led by Michael Saylor is the founder, and then the CFO or CEO these days is a gentleman by the name of Fong Lee. And they are a Bitcoin holding company. They've had a software business for the last 30 years, still do. But during COVID, they looked at their pile of cash and said just that. What do we do with this pile of cash? It's melting away. They had time on their hands, and they came to a conviction that the best thing they could do with their cash as a company was invest it in Bitcoin. And they did it. They went in hard. And then from that time, they said, boy, we did that with our cash on hand. What if we entice more new dollars, not just dollars made from our software business, but more new dollars, and we start adding to this reserve that we have? And that becomes our value proposition to people. Our common stock, which is MSTR, MicroStrategy, is backed by this war chest these days, 720,000 plus Bitcoin. It's backed by that. And you mentioned that Bitcoin is this pristine collateral. That is certainly our conviction. That's our contention. Somebody should dig and dive into that and say, what does that mean? And see if you think it lives up to such a name. But it's this pristine, wonderful collateral. It's an infinite fixed supply, the only finite, truly finite fixed supply in the world. It's got some of the properties of gold, but in many ways, it avoids many of the downsides of gold. It's got some of the properties of paper money, but it avoids many of the pitfalls of paper money. It's this new thing, pristine collateral. Well, it's hard to get some individuals, like a 76-year-old woman, my mother, to invest in Bitcoin. She does not need volatility, even if on the far side of the volatility, there's a promised great upside. She needs steady income. She needs to have her stuff safely parked in places and know exactly how much topside there is, which is to say, can my investments every year grow to a certain amount? Can I live off just that growth? And if I can't, can I draw down on my overall assets in a responsible way that takes care of not only this year, but maybe all the way to 100 and 105 years old, this type of thing. These are the types of questions a retiree might ask themselves. Well, Strategy came along and said, boy, we're struggling to sell our common stock, MSTR, to David's mom. She doesn't want that sort of volatility. Meanwhile, we have this high conviction that Bitcoin itself, the value of Bitcoin, even though it's turbulent day to day, week to week, month to month, and sometimes year to year, if you look over a long enough time horizon, we've said that before, 4 years seems to be one of the magic numbers there. Anytime you look at Bitcoin and you're willing to hold it for 4 years or more, that volatility begins to really iron out really quickly. And you get the benefit of the top side. But they said, we think Bitcoin's going to grow at 40% here year on year in the coming years. It'll slowly draw down to like the high 20s over the next 10, 15, 20 years. But that's still tremendous growth. I mean, that's tremendous growth. They said, what if we took some of that growth and we stripped it off, we pulled it away and offered a new product where some of that growth is just very safely packaged in there? And that's what they've done with this Stretch product. They've said, hey, to buy a Stretch, it costs $100. Now, it can go up and down just a little bit from that $100, but they have ways to adjusting that. But the idea is that you buy it today for $100. You could hold it for 1 year or 11 years, but when you go to sell it, it's going to be worth that essentially same $100. But then every year, we give people back what's called return on capital, ROC or ROC. We give them back a certain percentage point. And they said, boy, what is stuff earning out there? Well, a checking account, I don't know. Some of the checking accounts earn nothing. I've seen as much as like 2.9%, briefly 4. You've got money market accounts that are a little bit more than that. But none of it's earning great, Jared. And we have a president who says, I'm going to bring in my new Fed chair soon, Warsh. And it sure seems that the president has picked somebody who will listen to him and lower interest rates, because lower interest rates are right now good for the government. It's a way to possibly juice the economy, the production sector. But you know what lower interest rates means? It means even worse returns on your checking account, worse returns on your money market account. So maybe you can get 1%, 2, 3, 4%, maybe 5 on something. But Michael Saylor comes along and says, what if we offer this stretch, this perpetual preferred stock, and we do something outrageous? We think our Bitcoin that's in the background, our reserve, is going to be earning 30 to 40% over the next 10, 15, 20 years. What if we take the first 10% of that and hand that back to Jared and his family? They bought one stretch this year for $100. By end of year, they're going to get, and this is their current rate, 11.5%. You're going to get $11.50 back at the end of the year. And actually, you get that monthly. You get a portion of that every month. So what they've gone and tried to do, and they're doing it right now, seemingly, is they said, we're going to, through this perpetual preferred stock, we're going to offer the best money market, the best savings account out there. It's highly liquid. You can rotate into it. You can rotate out of it. You get this return on capital. There's even some tax advantages there. I'm not going to go into that here. I'm just going to focus on the 11.5%. And here's what they think. They think they're going to do a favor to my mom. You know, people out there where the bond market stinks right now, but you could take some of those dollars that her financial advisor has in the bond market for her and reallocate them over to Stretch and just get a much better fixed income back. So my mom would probably never buy Bitcoin straight up. I wish I could have talked to her into it years ago. She didn't. She needs safer products with known returns. And that's what they've done, is they've kind of stripped off some of their top side and handed it back to the market and said, if you come in here and get Stretch with us, we're going to give you 11.5% back. And here's why they do it, Jared. I should probably pull this all the way through, because in year one, when they've given $11.50 back to you and your wife, they've also taken, what would that be, $88.50, and invested it in Bitcoin for their treasury. And Bitcoin's a fixed supply. Even though we're in this 50% downturn right now, they think that's only going to last so long before it picks back up again. And so they've created a machine for themselves whereby they have more cash to buy more underlying Bitcoin. That's a fixed supply. It increases in value, but they're able to take some of the top side of Bitcoin and hand it back to you in a very safe way. And there's whole buckets of money out there looking for products like this, and they've got it. So I think that's a very exciting one, Jared.
And I think it's one of the graphics. It's not Michael Saylor who created it. I'm forgetting what his name is. He has the different buckets of capital. So sort of the store of value capital, I'm forgetting what other the ones are, but this is a different place of capital that is seeking a different objective, right? Like you said, they're not trying to take $1 and turn it into $1 million. They're trying to do, in some ways, the more difficult thing, which is keep and preserve wealth while also increasing the amount of cash flow back to people. And so there are different people who have different needs in the markets in the world that we live in. And this is a very specific niche thing. And I think for me, the very interesting part around this too is how they keep the price around $100. And so part of that is the raising of the interest rate that they get back. You know, the higher, maybe that incentivizes more people. And so more people are interested in buying it rather than selling it, which keeps it closer to 100. But then at least what I remember reading was they will sell, the strategy will sell back STRC Stretch into the market once and anytime it's over 100 to buy Bitcoin. And so it's sort of hey, as people buy this and the price goes above, that's when they get to go and then take that additional capital and roll it into Bitcoin, which is just an incredibly interesting way for them to get more. And theoretically, for then you too, as a holder of STRC, to then recoup your capital and not be concerned about them not having money to pay you back in the future. I think it's important. We should know here too, right? It's not a bank account though, so it's not FDIC insured, et cetera, et cetera. That I think they market it in that way. And in some ways, I think there are many reasons not to be necessarily concerned about that. But nevertheless, it's not the same thing as a bank account as much as we might like to think of it in that way.
I'll add just one more thing. The 11.5% back right now, if you were to take $100 and do that year on year on year, 5.5 years, you would have a better return from that stretch than I have on my house here, right? Which has increased 34% in 5.5 years. Why is that important? Part of the story as to why the housing market is so expensive right now is because without good, safe vehicles to invest in, people have been investing in houses. They're sitting empty. Families are not in them. They're using them as investment vehicles, but what a pain in the butt in terms of investment vehicles. You've got property taxes, you've got heating and cooling, you've got pipes that burst, just all the things. It's just a headache, an absolute headache. So back to your speaking of these different buckets of cash around, he is trying to entice people who have monetized other buckets, other investments, looking for a return, to come over to this, where he says, we'll take care of all the headaches. It's really simple for you. You don't have to have all those other carrying costs and other carrying headaches. And again, that's quite compelling. It's quite compelling, and we'll see how it catches on or not. All right, so that was the second one. We've got a product to help people get into homes or get out of their mortgages more quickly than is normally the case. So it's not a life sentence, as you kind of pointed out. We've got an investment product, which is stripping off some of the volatility of Bitcoin. Certainly some of the top upside, but you're not going to have the swings up and down. You're just going to have this steady step up of 11.5% on your investment year after year after year. And by the way, they have like 27 months of operating cash on hand to pay the return on capital. They've kind of saved up a war chest of dollars to say, no, we're good for covering these return on capital, these dividend-like dividends. So they've done that as well. What other products excite you, Jared?
I think it's a similar sort of vein in the income side of things. And so much like STRC, I think you can think about it as I'm going to gain the benefit of Bitcoin's price appreciation from someone else handling and being exposed to that, and they're going to kind of pay me for it, right? And so I'm not going to, again, like you said, my $100 is going to be worth $100, but over time, I'm going to get more back from that. And in a related vein, there are a few other, they're ETFs, exchange traded funds, that seek to do a similar thing, but somewhat different. And so I asked Gemini to put together an example, and I think this is somewhat helpful to kind of understand what this is, or puts it in a little bit more easy way to understand. So the analogy that it kicked back was, think about this in the sense of being a real estate agent or owning land, wanting to own land, etc. And that if you were to own Bitcoin, that's, hey, you own this place, right? You own your house, you own the land, etc., etc. But here's the problem. That house, until you sell it, isn't going to give you income. That house isn't going to make you richer every month unless you rent it out, right? But then you can't live there, and now suddenly you got to go buy a different house. And so there are two options, or two different things that I'm interested in, because they try and take that idea of, hey, Bitcoin isn't kicking back anything to you right now, and so maybe there's a way that we can do that. And so one of these is an ETF called BTCI. It's called the Neos Bitcoin High Income ETF. And so play that analogy out. It's you own the land, but you decide to lease it out to a farmer to generate monthly cash. And so what they do, you give them your capital, right? You buy shares of BTCI. And what they do is they invest that money in a few different places, but their goal is to capture some of that volatility, the upside, downside of Bitcoin, and give it back to you on a monthly basis. And so much like if you were to rent a house out, your renters are going to give you cash back for renting, et cetera, et cetera. And so they have two of these things. One is relatively new. One has been around for a little bit longer. But BTCI seeks to do, it's a strategy called cover calls. I don't think it necessarily matters for the sake of this conversation anyway. But basically what they're going to do is they're going to do things to, you're going to limit and you're going to lose out on some of the extreme upside of things, and you're still going to be exposed to the up and down though. So it's not stretch, right? Where we would think about that as being a constant fine line straight all the way through. There's still going to be this volatility, but instead of having to wait until 2030 when Bitcoin's finally $1 million and then I can buy a house then, well, they're going to strip some of that away and give it to you on a monthly basis. And so just like STRC gives you a check every month, BTCI is going to give you a dividend every single month because of the cover call strategies, the ways that they've invested your money. Now, they just came out with what they call a boosted Bitcoin high income ETF. And it's sort of like if that's not good enough for you and you want more exposure to the Bitcoin up and down price, that's what XBCI. And so what they try and do is they try and get 150% exposure to Bitcoin, which is meaning they're trying to get leverage. And so in this sense, think about it as a leveraged landlord. So you take out a mortgage to buy extra land on top of what the mortgage you already have, and then you also rent all of that out. And so in this sense, you're going to be exposed to the even further ups and downs, that if Bitcoin goes up 1%, this is probably going to go down or up 1.5%. If it goes down 10%, this is going to go down 15%. And so there's greater risks there, obviously. But again, the goal then is to give back bigger checks to those who hold the asset itself. And so we would say, hey, Bitcoin is the thing you want to buy and you want to hold. But what I'm curious about is the way at which this helps you gain some exposure to the long-term price appreciation while also putting income into your pocket. Because for so many people, whether it's not just in, my Roth IRA, but in my regular day-to-day, at least right now, I'm not necessarily worried about retirement. I'm more like, hey, I wish I had an extra $200 a month, or I wish I had an extra fill in the blank. That in some ways I have a cash flow problem more than I have a long-term growth problem. And these sort of ETFs seek to help meet that niche, meet that market, all those sort of things. But I think the thing that you have to know here, because I've done this. I bought a similar sort of thing for MicroStrategy, and I bought it basically right when MicroStrategy was peaking, and I am down something like 80% of my investment in that. And so, I've lost a lot of capital there. I'm still getting the dividends, etc. from that. But because I was exposed to the downside still, I still lost a lot of capital. That's where something like, if you don't want that, Stretch would be a better place for you. So that's what I'm curious about with these, David. I don't know if you've done have any interest in those or looked at any of those or anything like that. But that's what I'm interested in. I think it's at least a helpful thing if you're trying to increase the amount that gets kicked back to you on a regular basis.
I have not. That's a whole area I have just not been comfortable with, not because I think it's uncomfortable, but because I have not taken the time to understand it. And there's probably a lesson in there for me and our listeners as well. So, you don't just take somebody else's word for it. You might hear what somebody else is saying and say, do I want to give the time to that to gain a working knowledge of it sufficient enough to give a solid yes or no? And I'm not there, particularly on the covered calls, the options and all that. That's a world that seems mysterious to me, but I hope to actually in this year spend some time with it. Honestly, based on a stock position inside an RA that I might be able to do some covered calls on it in the future. But what would I be doing? You're taking some amount of risk. What does that mean? How much risk is that? You're talking about a company that's put together a product that they're doing that for you. They are managing the risk, but you are, in fact, just as you pointed out, entrusting somebody else. So I'm just not fully there yet. Nope, not there. But
and the thing to to say that a lot of times you think about what is growth, right? And so you're going to get income every month, but you're going to lose out on the sort of overall upside. And so the example, right, would be there are gold income ETFs that seek to do the same thing. And if you look at a gold ETF that does this compared to the price of gold over time, you maybe have gotten about the same return, slightly less, more than likely, because it's it's stripped away the upside to give you sort of a check on a regular basis. And so if you look at a gold ETF that does this sort of income thing compared to GLD is up crazy amounts of percent, and this is not. And so in some ways it's what do you want, right? Come back to the stretch thing. What is your goal? Who is it trying to meet? What's your target? All those sort of things. It's about knowing what you want and how you want it, sort of thing, as you think about different Bitcoin products.
Absolutely.
So you got another one for us, David? I know we've got a little bit of time left.
We've got about 10 minutes here. I would just say it's becoming more mainstream, and you have your own story about this from sort of the last epoch, but it's becoming more streamed. The tools are out there now more and more to be able to say, hey, I have my Bitcoin, but I really don't want to sell it. There might be a variety of reasons you don't want to sell it, but here's two. And pardon me. The first is that, as we said, it's the only asset in the world that's an absolute finite fixed supply. There's sort of, and we're in the early innings here, there's sort of an argument to say, you've got something very special. How about you hold on to it and hold on to it for some time, or as we say, hodl for some time. But it's also true that if your asset has appreciated the second you sell it, you now are in a relationship, that special relationship with the U.S. government, where you owe them more money, taxes, capital gains taxes in this case. So Bitcoin allows normal people to do what the wealthy have been doing for a long time, which is to accumulate assets, not sell them, but then borrow against those assets. And basically this kind of mirrors that stretch product. The idea is you're gonna borrow against your Bitcoin. So let's say you post $100,000 worth of Bitcoin, and let's do something very responsible, like you're gonna borrow $10,000 against it. So it's a loan to value ratio of 10 to 1, which is very, very healthy. You've given yourself a more conservative bar than the actual bars are with a leaden or strike. But then your $10,000 that you just borrowed grows at a rate, and it's going to sound like a big rate. It's going to be 12 to 13%. And that is a lot. It's a secured loan, secured against your Bitcoin, but Bitcoin's volatile, and it's kind of a fledgling industry that's borrowing against it. It's hoped for that over the coming years, those rates come down, but we'll see. But the bottom line, you're saying, boy, I'm not paying taxes, though. I get to maintain my Bitcoin. And even though it's 13%, that pales in comparison to the, I'm going to call it now, 25 to 50% growth year on year that I think Bitcoin's got in it, the legs it has in it, in a variety of all these years to come. And so the idea is the growth of your underlying asset far outstrips both the amount of dollars you borrowed and the interest on those dollars. And I have now taken my first Bitcoin backed loan. I can say I've done this. The Rufner family is going on a big vacation this summer. We have a college graduate as of this May, and then who knows what starts happening with kids kind of flying out into the wind, and maybe girlfriends become fiancés, become wives, all of this. And so we've always been a camping family. We've kind of camped all across the West, all across America, the South, the Appalachia, and frugality was part of that mix all along. Like, we needed to be frugal, and we loved it, so it was a great mix. And now Megan and I, having saved for several many years now, are saying, gosh, what are our savings really for other than to choose to live off of at times, saving in investments in particular, and one of those investments being Bitcoin. And so we're saying, let's borrow against it to pay for that. Now, I got to tell you though, Jared, if Bitcoin was at its all-time high right now, and in price discovery above that, I probably would have sold some Bitcoin. But on a 50% drawdown, where I think it's at the bottom or very near the bottom, it is risk. I'm here to tell you it is risk, but I've done my homework. It aligns with my convictions. And I can also settle that loan at any point now or into the future by selling some of that very Bitcoin that I've put up as collateral against the loan. So for whatever it's worth, I have now entered into this relationship. I know you have a look on your face because you have a story about that
man.
Years ago. Go ahead.
Yeah, I think I've told it here before that there was a company called BlockFi that it was in 2022, I believe, that Bitcoin had went up to like 60,000, cut down to 30 or something, and I decided to take some of the Bitcoin that I had and get a loan and buy more Bitcoin with it, which sounds great, right? You think it goes up and then suddenly you've got more money than you paid. And so you can just liquidate that and pay off your loan. Except the company that I took that loan from began to be in trouble, and I did not, then the Bitcoin that I had also went down in value. And so now I didn't have enough Bitcoin to really, I didn't want to lose my Bitcoin. And so I need to find a way to pay off my loan to get my Bitcoin back, et cetera, et cetera. And I don't know how many days I was away from losing it, but the company that I had a loan with eventually went bankrupt, and scary stuff. So I don't take it as against taking loans on Bitcoin itself, right? That is not the problem. It's more the company that I took the loan with that was the problem itself. And I think in some ways that is a sign of that health, that there are now companies that have existed since then that have not, gone belly up under, whatever the phrase is, and that there are companies who have specifically pledged to not do what this company did, which was they took the Bitcoin that I gave to them and then they gave it out to somebody else. And so the fancy word for that is rehypothecation. And so when you do that, maybe you do it once is fine, but when you do it over and over again, and then everyone comes back to you and says, okay, I want my Bitcoin back, and suddenly you don't have the Bitcoin to give to them back, well, now you have a big problem. And so that's what happened for them. But I'm assuming the company David has taken the loan with, what I'm assuming who it is, has promised no rehypothecation, that your Bitcoin is still there, is your Bitcoin when you give it to them, et cetera, that they're not going to go and take it and sell it to somebody else. So
That's right.
A scary thing. I don't know. I just told Emily last night about a different product, and she said, that sounds a lot like that thing that got us in trouble. I don't like that. And so it's one of those, like, I've probably ruined Bitcoin loans for us. So who knows what that looks like for our future with maybe I can convince her, hey, here's why this won't be a problem if we do this again.
I'll tell you what, as kind of a commitment to you, our conversation, and just our listeners, I'll update on that over time.
Sure. Yeah.
Not
Please
recording, but I'll gladly revisit this and share kind of what I've learned in the course of it, and whether it was truly a favorable thing to do or not. So we were torn.
We'll find out.
I thought we'd be at all-time highs and I'd be selling. Just, I'd be selling less than I'd ever have to sell before to cover said vacation. But with this 50% dip, I'm having to lean into something else, which is both scarier and has the ability to have me maintain my overall supply of Bitcoin and choose how to satisfy the loan or not into the future. We will see.
So hopefully this has been interesting. I mean, think about it like a purview of the land out there, right? Not necessarily endorsement of any of these things, but hey, if you're sitting on the Bitcoin porch overlooking the prairie in front of you or the mountains, these are some other things that are happening around that, again, I would say are signs of adoption, right? Yes. Bitcoin is becoming the asset that it is meant to be, which inevitably means there will be more and more companies and products for you to consider, for you to use. And I would even go so far as to add safer products, from the sense of these are more respected, higher reputation sort of people than maybe what was 4 or 5 years ago as well.
And I'll say this,
anything else you want to add?
Yeah, just related to that, for however many years we have, I mean, watch for the communications from your own bank. The national banks. That's going to be one of the next bigger trends that would actually relate to this video. We're just not there yet. And it's probably not going to be super exciting to us that our banks do this. I, quite frankly, like having my bank be over there and my Bitcoin financial services over here. Because, here's why. Because of the track record of banks in the past. That's why. And rehypothecation. I'd like to keep my rehypothecating entities over here and my Bitcoin pristine collateral entities over here. But listen and watch for that, listeners. It's coming for the banks. You're going to start hearing from many big national banks, including maybe your big national bank, that they have Bitcoin custody services, that you can buy Bitcoin directly from them, that maybe they will have a savings product that's at 6, 7, 8, 9, 10%, when really in the background, they're investing in Stretch, right? They're investing in Stretch, giving you some of the top side, the liquidity and the FDIC that you said was missing in the STRC native. But then they're keeping a little bit of that 11.5% themselves for being the middleman with that. But I think that type of thing could well be coming. So let's watch for that.
Awesome. Well, let us know what you thought. Again, leave a comment, send us an email. All of that's below. David's got one more thing. Then I'll let you close it out and send us home.
I'm not sure we mentioned the name of Jesus. All of this is exciting, but much more exciting is what's happening in your local church as Christians around the world journey here in Lent to Jerusalem. It's not because we don't know what happens there. It's because we know precisely what happens there. And it's important that we go there once a year so that we can make it through to Easter and be reminded that every Sunday is Easter. Every day in the Christian life is Easter, which is to say Christ conquered sin, death, and the devil for me and for you, Jared, and Judah. We'll be praying for Judah. And here's the best part, for all the world. And you say, I'm not deserving. And you say, spot on, none of us are. And yet God has done it in Christ.
Thanks for that, David. Good reminder why we're here, all those sort of things. So we'll catch you next time as we, again, talk about our love for Jesus primarily, but also for Bitcoin too. Thanks for being here.